Well, gold prices, though, falling to a 7-week low in today's session, following more evidence of a stronger U.S. economy, which rallied the dollar. But our next guest says the gold rally will resume, more than doubling prices in the years to come, and you may want to pay attention. 5 years ago, James DiGeorgia, publisher of the Gold and Energy Advisor newsletter, said gold prices were headed for $1,000 an ounce within 5 years, and he was right. He's also the author of the Trader's Great Gold Rush, and he joins us now on set. So let's get to it, because you were right. You expected gold to go above $1,000 an ounce this year. I'm just curious why you picked 2009, 5 years ago.
Well, actually, I didn't pick 2009. I actually picked between 3 and 4 years. This year, when gold fell back in July to $750, I appeared and made predictions that it would hit $1,200, and it actually did. But the underlying reason for predicting that gold would go up was the exponential growth in the supply of money and debt that's really been taking place both here in the United States and abroad.
Right.
But especially here. Ever since getting into the gold business as a child, I got started in this business, traded gold and silver at the age of 16. I caught the first 1980-81 bull market. And I learned very early on that the best insurance against the greed and stupidity and power grab of politicians was gold. And it's really the only true money when they destroy fiat, the fiat system.
All right, but you did call it right about gold, topping $1,200 an ounce. I guess, what we all want to know now, where do you see gold going from here?
Yeah, well, I can smile because I actually think that this correction right now, this little flurry in the dollar, like your last, guest mentioned, is very, very temporary. It's a trading thing.
Right.
And, this pullback that we're seeing, I actually shorted it in an option service that I write. And my target was 1050 on this pullback from over 1200. So I've done very nicely on that particular move.
Right.
But longer term, it gets scary. And it gets scary in that this year I'm predicting that gold will break $1,500 for the first time in history, and that there is a very, good chance that we're going to see a spike to 2,500 and higher in the next 2 to 3 years.
But what about, we're seeing some strength come back into the dollar. I know you wrote in your most recent report, you talked about the crash of the U.S. dollar, but hold off on that for a moment. We're seeing strength once again in the U.S. currency. Does that, how can gold gain if we're starting to see strength again in the dollar? Well,
it's a very temporary, gain that you're saying, and it's primarily being driven by fears overseas. We've had very serious crises that are starting to emerge overseas in Greece and Eastern Europe, and for the first time we may have a member of the EU, actually break down and not be able to fulfill its commitments, and this kind of fits. We're a reserve currency of the world, so
you see a breakdown of the dollar big time.
I see the dollar falling down, and I'm actually very concerned. I hope I'm wrong, but I do see a monetary collapse coming that will affect all currencies and fiat money as we know it, because the exponential growth in debt, we keep digging ourselves deeper and deeper and deeper.
You don't think, though, let me ask you, Jimmy, as the economies, the global economies start to unwind and recover, don't you think some of that debt will certainly be brought down, maybe rather fast?
Well, actually, the debt will explode, because if the economy does come back, as we all hope that it will, interest rates will rise, and as interest rates rise,
we're going to put a brake on everything.
We're going to have to service that debt. So when you get to the point where you're owing 18, 20, 24 trillion dollars, every 0.5% incremental rise in the rate of interest, compounds the problem. I always think of
it sounds like you've got a pretty ugly future here. Not you personally, but your outlook.
And I always tell people, I hope I'm wrong. I tell people you should put 15% of your money in physical gold that you store, that you hold. No certificate programs, no nonsense, just in case the politicians manage to really mess it up. I often tell people, Rome didn't collapse because the barbarians were coming at the gate. It was because the Senate became so ineffectual that they put themselves in such debt. They destroyed the Roman Empire. So
I'm assuming that everything that's going on in Washington right now you disagree with.
Well, most of it. I think Senator McCain, had a real point when he said, that compared to the Madoff scam, this health bill that's being passed is a much bigger scam.
All right, so go back to let's talk a little bit more about gold. So what is you said that everybody should have a little bit in the hard asset of gold. Talk to me about some other strategies that investors can maybe, kind of buy into if they buy into your outlook.
Let's just assume that for somebody who doesn't want physical gold, that they're allergic to it for whatever reason. Well, one of the best places ways you can do right now is look for the junior mining companies and, lower-end mining companies that have reserves but haven't developed them. Because what's happened in the last decade is that we've tripled the amount of money that we spent on exploration of gold, yet our gold discoveries are down 90%. There hasn't been a major gold discovery in 2008 or 2009.
And you don't anticipate it?
No, and I think we've hit peak gold.
You do think?
And I'm not the only one. The president of Barrick Gold, one of the largest gold producers in the world, came out and said he believed that we were or may be at, peak gold. So by concentrating on smaller companies that have large reserves, I think we're going to start to see a takeover wave take place.
All right, 2,500 though, by when?
Within the next 24 months, but 1,500 or higher this year.
All right. This year, so 2010.
2010.
All right, just checking.
This coming year.
All right, James DiGeorgia, thank you so much. Appreciate your time.
Thank you very much.